Greetings, Dr. Jeffrey Scott, and this is going to be my weekend market update for that Market MRI Pro, my new app, and I'm using it solely for this presentation. The question that I ask is this time for the bears? We are in a very interesting time in the market. We have an election on Tuesday. No idea who's going to win. Interestingly, it's not even a simple what happens to the market. If Trump wins, there's certain industries and sectors that are going to benefit. If Harris wins, the same. I think the market's going to be fine either way unless they sweep the presidency, the House, and the Senate, which probably not too likely. But what else is going on? We have a Fed meeting pushed back to Thursday this week because of the election. At least they're not going to have another rate cut before the election. We've got very interesting economic news. I think all the inflation data and the economic data seems to be coming out stronger than expected. And then we get this really awful employment number on Friday, which maybe that was only related to hurricanes and Boeing shutdown, but adds to the entropy and confusion. And then we've got Hindenburg omens and markets that the major indices might not reflecting the underlying stocks, which might be doing worse. You put that all together and you've got a time where I think this market is certainly at risk. Am I calling for a major sell-off? No. It could happen. Am I expecting a big move up? No. I'm expecting a correction here. And let's go through the data. Let me show you what I'm looking at and talk a little bit about how I'm preparing my portfolio. This is a new email for most of you. It's a marketmripro@gmail.com. And that will be the email I tie to this app and commentary about this app. So this is a new tool. It's still in beta testing. We're going to send it out to a few of the people that have my other tools and get their impressions soon. We really wanted to speed up some of the charting and bring in additional charting features, and that's what's delaying things, but there's no rush. I'll get it out when it's ready. Everything I do should be considered for education alone, and any recommendations I make are taken in the spirit of education and investment advice. I do this to talk about top-down investing and how I use the tools. Trading involves risk. You are solely responsible for any investment decisions you make, and I may own or intend to sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisor before making trades. The most important thing is what I'm doing is education. I am not giving investment advice. I have a big license. It says MD on it, but I don't have any of the financial licenses that would give me the right to even talk about suggesting what you should be buying and selling. Now this is new. I have just launched a new Google group. Some of you are aware that I've had a email distribution. When I post something on stocksanddocs.com or in YouTube, I would send out a quick note letting people know that I've done that, thoughts on the market. I might even share with them the video before it's posted in the morning. It's become cumbersome in many ways, but the biggest problem with that is I get flagged as spam. And so if you have a Gmail account, you haven't been getting my emails for quite some time. So I decided to do this through a Google group, which should alleviate some of that spam risk. Now, let me talk about the intent of the group. The intent of the group is to talk about top-down trading. Therefore, I call the group Top-Down Trader. It is somewhat agnostic to tools, but not agnostic to market approach. I have tools in wealth charts. I have tools in TradeStation. I have tools in TradingView. And I will soon have tools in Metastock. And I also have soon to be launched the Market MRI Pro app, which is what we're going to use during this presentation. I don't trade any differently whichever tool I'm using. So if you're interested in how I trade, if you have one of the tools, if you're interested in one of the tools, then it's a great place for you to be. If you want to comment, you want to ask for feature requests, questions, great place. I'll be posting workspaces and other things over time. If you're going to be offended if I talk about a different platform than the one you have, don't stick around. I am not limited to any platform. I don't own any platforms, and therefore I will talk about whatever I want to talk about in relationship to top-down trader. And then I also forgot to list HGSI, www.highgrowthstock.com, which to me is the granddaddy and still a very useful tool in doing top-down analysis. In some ways still has some of the best features. So if you want to join, you go into Google Groups, just Google it, click all groups and find the groups that you want to join. Mine's called Top Down Trader. Click Join Group. You can link or unlink your Google profile. And then in the subscription section, choose how often you want email updates from the group. You'll have to be verified by me, but I'm not really limiting this group. Now, and then you click Join to Group. Click Join Group to join. Now, to be honest, I'm looking for people that want to interact. I want people that give constructive criticism. And I will block people that are spamming and political commentary and things that are not constructive. So hope you join, and I think it might be a good vehicle for sharing not just my thoughts, but your thoughts as well. So now that was a long time of talking. Now let's go into the product. So this is the Market MRI Pro app. Believe it or not, the initial request of Praveen, who's just a brilliant programmer, was I want a real-time app so I could be scanning for my dots, relative strength crosses, OBV crosses, bongo crosses, intraday. And then I thought I'd just go look at one of the other charting platforms. But that wasn't enough for Praveen, and he has built something that's I think is going to be quite special. So let's start with my market timing model. So at the bottom of each of these ETFs is the signal. And you could see on the weekly charts, even though we had a tough week, we are still a buy in all of the markets. Why are we still a buy? We're still a buy because price is still way above the WMA. And you have to have on the same bar a close below the WMA and a red bongo to come out of a buy signal. We're nowhere close. Now, to me, the point of having a weekly signal is if you look at the spider, which went green on November 6th, you would still be in it a year later. You would still be long. Now, you had to ride through some pullbacks, but you would have been very positive had you just bought the spiders or a leveraged instrument tied to the S&P. The others have not been as clean, but if you look at the buy-sell line, you can still see you would have captured most of the gain. And that's the intent of this. So this is the weekly model. The weekly model says it's okay to be long. I look at this for my long-term money, where I'm not going to get to cash every time there's a small correction. Now, on the weekly money, on the weekly timing zone, you could see that we were at an extended level, and we've come down. But we've not, and this is a 3-month new high, new low in green, but not to a point where you expect a reversal. And if you look back, you could see when we get down here to the 5% or less is typically when the market turns around and goes higher. Weekly is slow. I also look at a daily version of the model. So let's see the daily. And the daily model here, if you look down at the buy-sell, once you see it makes its switch, here we go, you could see that we've now gone for the last couple of weeks to a sell signal across each of these on a daily. So how does that impact me? It means long term, I still think the market's going higher, but short term, there's weakness. So why would I be deploying a lot of new capital to the long slide? I might be raising cash, raising stops, taking profits, maybe nibbling to the short side carefully because my long term is still a buy. But I would not be adding and taking big bets, especially with earnings season, the election, everything else. Now, this is going to turn to a buy signal long before we see a flip in a weekly signal. So unless this just keeps going lower in the weekly follow. So I will use the daily signal to sort of temper my conviction. Right now I've got very little conviction to the long side. Notice that on the daily model, we're starting to get low on the 3-month new high, new low. So it will be interesting to see. It'll be interesting to see if we're going to get close to a reversal or not on the daily. So something to watch, but I am concerned about this market, and this probably validates it. The market briefing is designed to give me some real-time information of what's going on in the market during the day. And there are 4 or 5 major parts here. So let's start up in the upper left-hand corner. I like these 4 ETFs and the volatility. I want to know what they're doing in one day. Real time, all these things will update. Once the market closes, they stop updating. So you could see on Friday, the Qs led the market, diamonds, then the Russell, and then the Spider. You could see how the move at the open, these are percentages, okay? You could see the high percentage move, the low percentage move, and notice that none of them were negative on the session. You notice the Russell and the Spider all came down from the open, and you can see the range as a percentage of price. And lastly, you could see where they closed in their closing range, and you never want to see everything closing in the bottom part of their range. In fact, the VIX, which was the laggard, actually closed at the top of their range. So that will update real time. Over on the right at the top are the new highs, new lows, looking at the NASDAQ and the NYSE, looking at 1 month, 3 months, 6 months, and 12 months. And I'm looking at the net number to get a sense of what's going on. In a bull market, you'd optimally like to see more new highs than new lows. So the fact that these are red, at least short term, is bothersome. Then there's 2 sections here in this group. One section is the 11 S&P sectors, and I might look at one-day change. Make sure I clear all my filters here. Look at one-day change, and you could see leadership was consumer discretionary, technology, and healthcare. And on the one-day, utilities, real estate, energy, and staples were laggards. Now, if this market was going to collapse, you might expect the defensive things on the bottom to be stronger. You can look at over 5 days and see over 5 days, got to kill this filter. Kill this. Now let's look over 5 days, and you could see only 2 groups were positive, communications and financials. And real estate, utilities, technology were laggards. Okay. You can see on Friday, let's rank them by one-day change. Okay, you could see that consumer discretionary, and you look at the closing range, most of these things are well off their highs during the session. And then here we could look at themes. And the same thing, one-day change, cannabis, biotech, telemedicine, semis, telecommunications, millennial consumers, Dow Jones Internet, video games, copper. I've got a sense of from these 40 different ETFs what's leading and lagging. If you think about what's top down, it's making a determination on the market, but it's also looking at the various sectors. Now I'm going to look to add additional ETFs to be tracking and try and eliminate some of the duplication. And you can look at from 1 day, 5 day, or 20 day, or 50 days on these, and also where they finish in the closing range. So biotech is interesting here because biotech closed at the 98th percentile of the closing range. It is flat over 50 days, up a little bit on 20 days, up 2% in a tough week, and up 2.3% in the last day. Now, is biotech turning around? It might. You'll notice that the color line will change here every couple of minutes. That's just doing an update. Now, I have 3 different indexes here. I have the S&P 1500, which includes the 500 large cap, 400 mid cap, 600 small cap, the NYSE, and then the NASDAQ. And on each of this, we've grouped every stock into a sector and an industry group. And so real time during the session, I could look at each of these and see what percent of the sectors are up, the industries, the stocks, and then if you think about the Bollinger Bands, you've got a midline, which I think is a 20-day moving average, but it's half the area in the Bollinger Bands is above, half is below. And in an uptrend, typically most of the stocks are above. They run up to the top, they pull back to the middle, to the top, to the middle as they work their way higher. And in a bear market, most of the stocks are below the midline and they go to the bottom, back to the midline, further to the bottom as part of a downtrend. So you want to see the above the midline to be high. Only 37% on the S&P 1500, 33 on the NYSE, and a little higher, 43 on the NASDAQ. So this gives you great insight during the day about what the breadth is, what the internals are in the market. Again, why is that important? Well, I think we all know that some of the biggest returns and biggest moves come on reversals. And when you see the indexes are really high like they were on Friday morning, but some of the internals are weak, it'll be like my comment to Praveen around lunchtime. Market's much weaker than it looks. And what happened? The market ended up following those comments and pulled back. So a lot of help there. The buckets. Now you're used to from my weekend reviews, my buckets on the S&P 1500, which I can do an edge rater. You can do an edge rater. Sagar's done such a great job in the Q tools real time. Well, if these will ever update today, and I think things are a little slow right now on my computer, but the buckets will give me the NYSE, the NASDAQ, the Russell, and the S&P. I'm going to pause this and reboot it just to make sure. There we go. I'd had two instances running, and I don't think that was smart. And I think that slowed things down. So I'm going to still reboot it and bring it right back. Okay, this is running on the development server, and we haven't put it into the live server that will be higher speed. So I expect it to be sluggish. Now, what we built here are four different markets: NYSE, NASDAQ, Russell, and the S&P 1500. And then, those that don't know the buckets, think about the Bollinger Bands. Percent B at the bottom Bollinger Band is 0. At the top Bollinger Band, it's 100. You can divide them up into 10 slices of 10% each. Starting at the bottom, that's what this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 0 would be a bucket of stocks below the bands, and 11 will be a bucket of stocks above the bands. And what I've learned over the last 25 years of trading is when you start to get a lot of stocks below, you're oversold, and the markets have a tendency to return to the mean or revert to the mean. Now 18 is getting there, but 30 is more impressive. When you have a lot of stocks above, the market might revert to the mean and go back and reverse. So I'm looking for that distribution. It tells me a lot about the market and change. There are 3 time frames here. This is weekly. So the wide bars are weekly. You could see a week ago it was still weak, but it's weaker now with more stocks on the left-hand side of the chart than on the right-hand side. The thin bars are the dailies. So let's just turn off the week for right now, and we could see a couple of things. So if we look at the NYSE, certainly shifted to the left. 18% of the stocks in the NYSE are below their Bollinger Bands. And if you think about it, if a stock spends 90% of the time between the Bollinger Bands and 18% of the market is below, that's a signal. Now, do we have to reverse from here? No. It can still get worse, but it's telling me to be aware. Be aware. And you could see that it was actually higher on Thursday because the one-day bar is higher. And when I call it a left shift, it means most of the stocks here are trading on the left-hand side here or below the midline of their Bollinger Band. This is the NYSE. Think about the NYSE: bank, energy, not a lot of perhaps technology. Here's the NASDAQ. A lot of technology. Also shifted to the left, but interestingly on Friday in the NASDAQ, the number of stocks at the top of their range actually increased, and the ones at the bottom decreased. Why? I think we had some high profile earnings like Amazon and others driving the market higher on Friday. The S&P 1500, which is really the gold standard because of the aforementioned comment that includes small, medium, and large cap stocks, also improved some with the over 20% on the session before, pulled back to 16%, and not as many things under here, though. Look at this. Even here, you had more stocks at the high end than you did the prior day. So, improvement in the S&P 1500 and the same in the Russell 1000. I do look at this intraday. Now, you might say, well, this looks different than some of my other programs. Yeah, probably will. I think we're still perfecting this, and people may be treating ties differently, and the index components may change over time. But I think you'll find the pattern is going to be similar. And I don't know too many that are breaking out the other indexes. And then the last piece on the market side is I'm looking at breadth. And there's a lot of things here. Down on the bottom, the green lines represent Eurekas. Eurekas are exuberance. We see these at bottoms. All right. The little salmon colored crosses are bangos, another sign of exuberance. The arrows down are Hindenburg omens, a sign to be concerned. And see if I can find some. We have the CPR signal is what happens when you're dead or you've had a big event, and then the market has a signal that says you're going higher. All right, they're not firing here, so I got to see if Praveen turned them off, but we've actually come up with a signal that will fire at market bottoms, and it is impressive how good it is. And we called it this. Here it is, the CPR signal. This is going back quite some time, but these green triangles at the bottom become analogous and the opposite of the Hindenburg omen. So we'll introduce those with the math sometime soon to give you a sense of what we're looking at. So I look at the markets, and when I see a number of Hindenburg omens, when I look at breadth here, stocks above the 17-day, stocks above the 50-day, and stocks above the 200-day, on the NYSE and the NASDAQ pulling back, when I look at new high, new lows, AD lines, more red than green, it just tells me we got a weak market, and we did have a fresh Hindenburg omen on the NYSE. I'll do a separate video on why I like the Hindi, but the Hindi is a signal of a market turbulence. Only 1 out of 4 confirmed, and this one's confirmed. It's got to be within 30 bars of the last one. Only 1 out of 4 confirmed actually will be a major sell-off. It's hard to see the market, unusual to see the market soar after Hindenburg omen. You might get sideways or a small correction, but there's not been a major correction, including the Great Depression, that did not get preceded by a series of Hindenburg omens. So to me, the Hindenburg omen matters. So we see that, so that's a concern. So that's about my take on the market. So my take is still the long-term trend is higher, a lot of short-term weakness on the dailies, and breadth signals that say we're not bad enough to reverse yet, but maybe I should be thinking about that. Maybe we get a swoosh to the downside with the election and then we recover, kind of like what happened the last time Trump ran, when he won the first time. Now, there's a lot of different ways we can look at industry groups and sectors, and something that I like, I do this in wealth charts, is we pre-formatted ratio charts. So when these charts are comparing the instrument, so we have Bitcoin here, the rest are the 11 S&P SPDR ETFs. We're looking at hourly charts, and what's leading the market's going to be up in the upper right-hand corner. So communications and discretionary. Now, this isn't their performance as individual sectors. It's their performance versus the SPDR. And these are outperforming versus the SPDR. All right, that's kind of what I like looking at. What's really not performing? Real estate, Healthcare, staples, even utilities. What are those? Defensive plays. So one contrarian finding here is if we really thought that this market was going to collapse, wouldn't the staples, utilities, and rates outperform? So that's a positive for the bulls. Materials and energy are weak as well. Financials may be the third best. Excuse me. And industrials, which had led for quite some time, has pulled back some. Gives me just a sense of the sector movement. Now we're going to go into what's called the JAS layout. So right now, and the reason why I haven't released this is it's set up for me, but others may have other things that they like to do and other setups they like. So we're going to build in the rest of the, or not build in, I say turn on some of the other indicators over time. But right now it's pretty much set up for my style of trading, and that was intentional because that was the original thing we were doing. But I guess we call it um, scope creep. We kept expanding what we were going to do. So up here you see a number of major indexes, and you see something called JAS. JAS combines the NYSE, the NASDAQ, the Amex, and puts a dollar and I think 100,000 share limit. And if I turn off all the filters, let me make sure they're all off. They are. We get 3,373 trading instruments. Now, personally, I don't trade those. I would come into filters and I'd put price greater than 5 and volume greater than 500 before I'd even consider looking at a stock. That's, occasionally I'll go outside that. So the real universe is closer to 1733. But for the sake of this discussion, let's just kill those filters and we're going to look at the 3,373 stocks. Across the top, we have last change percentage, how many up dots. So when I look at here, ADMA, which is one of the stocks that I like this week, big uptrend, pretty bad pullback, and a big breakout taking out the 50. Great volume, and you can see here there's a number of dots, and we'll have to talk and introduce you to some of them. But the first dot, which has been green for 4 sessions, is my EMS, and that's my early movement signal. And that is a trading system by itself that you could trade successfully. And I developed that when I was doing intraday trading and futures, and I could spend all day by my computer, but those that know me know that I work full time now, so that's not possible. The second dot is a CPR dot. Actually, I have to remember what we called it in this program because we've got the CPR as the other signal. No, the other signal, the green triangles, was a defibrillator. This is the CPR, and that's another buy-sell signal. Both of those are green. And then we got 4 dots here. The first one is gap, big gap, volume, big volume, breakout, momentum. The next line here, which is not firing, is the squeeze. We did not come out of a squeeze. A PSAR reversal. And then this is relative strength, OBV versus its EMA, and the relative strength of the instrument versus the spider versus its EMA. And the important thing here is the boxes. And this tells me we flipped to positive on both of those. And that's more important to me than the how much positive. So I have a stock here that had a big gap up on volume, breakout momentum, strong relative strength in OBV. I come up to here to my high jump, which is a objective measurement of extension, and we're at 62.07. You can see we were at 100 up here, and we pulled back. We were, let's see if we get this one, not quite 100 here. And right now we're at 62, which tells me I'm not so extended that I'm going to pull back because of extension. And then, so that's what that shows. Let's kill that. A number of down dots. And then how long ago the daily bongo switched, which is on the bottom. How long ago the weekly bongo, and it's still red for the last 3 weeks. Remember, this is a daily chart. If I flipped it to a weekly chart, you'll see that it's been Well, it should go to 4 soon, but it's been red for a number of bars. Then we have three different momentum sorts. Short-term momentum, what's leading to the upside, was booking. And you could see how it's had a big move. MDGL, Magical Pharmaceuticals, which had a big move. Big would be an understatement. Waters Corporation, and I'll say most of these big moves are either news events or are happening in earnings reports. And then I have OBV, relative strength versus the spider and weekly, whether it's green positive versus the moving average or negative and how many weeks since it changed. So I could do a bottoms up where I don't really care about industry groups and look at what the leading stocks are to the upside or to the downside with various ways of ranking them. If I want to see the weakest stocks, I might just do this and look at, I think this is a cement stock, MDU Resources. You wonder if there's a split in there. And I don't fault any program for missing a split by one day. We'll see if that gets fixed. On Monday, LRCX was down 37%, and you could see just a LXRX, Lexicon, must have been on bad news. Now, remember I'm a top-down guy. Here's the top-down. Check this out. Here are the sectors. Change, percentage, short-term, medium, long-term momentum. Here are the industry groups. And there are 144 industry groups that those 3,733 stocks are packed into. Here is ranking these by short-term momentum. By short-term momentum, travel services is the leader. Here are the 15 stocks that are in travel services. Let's rank these by short-term momentum. And we could start to do a top-down analysis. Bookings. Looks great. Pretty much too far gone for me. Make my travel an Indian stock. Pulling back. This looks good. It's actually squeezing. You can see the yellow line there. Relative strength and OBV look good. It hasn't broken out yet, so I might want to put that on my buy watch list. So let's check it. Norwegian Cruise Holdings. I just took a cruise on Royal Caribbean. I'm going to hold back my comments because I want to keep this clean. Not the highest end cruise line, but we still had a good time. I got to go with my buddy, one of my trading buddies. People know who that is. We had a great time together. And you could see that it actually has topping signal here and pull back. So I probably wouldn't be interested in that. Trip.com, big run up. Kind of a nice little triangle pattern here. So, and then Airbnb, not yet. Viking, sideways move here. This might be one I might want to watch as well. All right, let's now hit this. Next one here was medical distribution. And I really like McKesson a lot here. Now, it's hard buying a stock after a $26 move, but this is a group that does well when the economy doesn't. And I love McKesson. Now, I've sold two companies to Cencora, which is the old AmerisourceBergen, and I sold one company to Cardinal. And I think all three of them are amazing companies. They're great operating businesses. When I say I love McKesson, I love their stock. It's just been such a big performer. Now, is it ready to run again? Well, it's good volume. Had an EMS signal first day. It had a CPR signal, volume breakout momentum, PSAR reversal. Relative strength and OBV look good. It's not extended. I like McKesson, so I'm going to put a check in there. How about Cardinal? Cardinal had just great earnings on Thursday. And you could see Cardinal, which fooled the market, had a big gap up. Don't like them as much. How about Cencora? Recent CEO transition. and maybe that's causing it to go sideways. So of these, I clearly like McKesson the most right now as a stock. Medical diagnostics and research. Now, notice, although healthcare as a sector, um, on the when we looked at the XLV, remember the XLV is a limited number of stocks. But although healthcare as a sector was not a leading group, two of them are. So medical diagnostics and research. Waters, big move. And when I see something like this, notice the high jumps at 100. I almost expect to see this thing to trail back before the next move higher. So I want to watch that. I'll put it on a watch list. Thermo, big sell-off in the diagnostics. Is this one making a run? Well, you'll find a lot of them have that. Illumina is one of my favorites in this group, though. And this one is actually looks like a leader. But if you go back and put on the monthly, you can see how far it's fallen. But Illumina is a great company. They recently had to spin out Grail. And I like Illumina, so let's put that on my watch list. MEDP recently sold off hard and still not ready. And then one that is a bit of a high risk one that I thought was interesting was Guardant Health. And this is another in the same class of diagnostics. They make a great test for lung cancer, and it's something that so many of my colleagues use in healthcare. I'd like to see it above the 200, but let's just put it on my watch list. I'm going to add that. And so you have the ability to go from just an industry group leaders, or I could do short-term momentum and look at, here's healthcare here, and let's look at the rest of the healthcare. Plans, you had some big sell-offs here. But look at the moves that we saw on Friday in a tough tape. Elevance, hard to buy a falling knife. United, might be worth watching. Cigna, falling knife. Molina. So one that I did think was interesting, and I'll show you why, is Oscar. It seems to be bouncing in this area here, and this is in the lower part. It took out the 200 on Friday with breakout momentum, a new EMS signal, and it turned positive on relative strength. Not yet on OBV, but it looks like it's going to cross in the next day or so. Again, it's low in its pattern, but it took out the 200, so I like that as well. So let's click on that. And then the next one is biotech. And there's that Madrigal that I showed you, big move already. This is another one that's had a big move, ARGX. Expensive stock. Don't like that candle. The ones that I like the most would be Halozyme, which recently had some really good earnings, and I really like their story of what they do. Great volume, EMS signal, 4 dots, relative strength and OBV flipped, like that. And then how about ADMA? We looked at this before. I like this one as well. So I could spend a lot of time and go through the top industry groups and the top sectors, and my goal here is to start creating a watch list. Now, let's get out of this. Let's go back to the Impulse. I want to show you another feature that we built in. The Impulse has some scans of itself. So let's put on a couple of scans here to take out groups that I'm not interested in. All right, so I want them above the 200. I want greater than 500,000 shares. Price greater than 5. I'm down to 1,000 potential candidates. Now, I've learned over the years that one of my favorite trades is when this momentum signal fires 2 days in a row to the upside. And here I'm looking for stocks that are going higher, recognizing that there might not be a good time to buy. I'm more demonstrating the system. So we have INST, looks like a buyout. And then this one I do like, Granite Construction. It's been a big mover, a leader. It's been good to buy on pullbacks. Here's a breakout, those two momentum signals in a row. It happened back here. The market had a good run. I'm going to add that to my watch list. All right, let's go back in here. Let's turn off that last scan. Let's look at new EMS crosses up. Wow, 57 of them. Which ones had a lot of dots? Turn this thing off. PRLB, Proto Labs. Too much of a move. Tile, I like Tile, which is interface. It had a big move and it's extended, so it might want to pull back some, but let's put a check mark there. What's MD? Pediatrics. Probably an earnings move, so I could look at fundamentals. I could see the last earnings were November 1st, 29% beat on earnings, beat on, 19% surprise on earnings, 2.5 on revenue. That's a beautiful story. Let's pick that one as well. So what I wanted to show you here was we've created a tool that really mimics the best of top-down investing in many different ways. Sorry about that, hence still in beta testing. I created a watch list which probably just disappeared because I didn't have a chance to save it. But I was able to look at the market from a top-down perspective and build a list of stocks that were good from an industry group, from a sector, from a bottoms up, looking at all of them, multiple different trading systems, and as well in the beginning part of this presentation, I spent some time looking at markets and the breadth. So my advice for this week, well, I don't give trading advice. What am I thinking for myself? I'm thinking for myself that this is going to be an interesting week. Because we're approaching oversold, I almost wonder if we have an early washout in the week, go through the election, and then bounce. But I do think a correction here is high risk. We've got a Fed meeting with Powell speaking. Everybody's expecting a 25 basis point cut, so am I. But think about the inflation data. Think about GDP. Everything's been strong, suggesting that this market's going higher, and that inflation's going higher. And then what happened on Friday? We laid an egg on employment, but I think a lot of that weakness is probably saying hurricane damage and Boeing, so maybe we shouldn't pay a lot of attention to it. I think it's an interesting market here, but with those Hindenburgs, the oversold signals, the falling advanced decliners, the new high, new lows, I'm a little nervous here, so I'm going to be careful. I've lightened up my positions. I've taken some profits, built up my cash, and then I'm going to look to see what the market does on Monday. Am I going to go all in? I'm going to wait for those daily signals to change. Am I going to buy contra ETFs? Maybe. Might be a good idea for me personally to think about hedging some of my portfolio. But at this point at noon on Sunday, I got to see what the market does on Monday before I make any of those decisions. So I hope you got something out of this. Sorry that I had the reset in the middle. It happens in a beta product. And I'd like to hear your thoughts on the Market MRI Pro. And have a great rest of the day. I'm going to go watch some football.